manufacturing, technology, hot topics, and a little bit of tomfoolery. This is the MTD Podcast.
Well, guys, welcome to another podcast. I'm Mark Deadman, and I'm here with Colin Griffiths.
Griffiths. Who's that?
Yeah.
And
also,
easy for you to say.
Mr. Reynolds. How are you going, guys?
Joe Reynolds.
Really good. Yeah,
and
really
you
good.
missed out our friend who always turns up.
Tomfoolery.
Oh my God, Mark, you're rubbish at the buttons. You really are.
Well, it's the
dreadful.
first time I've been pressing them.
Yeah, you're pressing my buttons right now, my friend. Anyway,
Well, okay, so today's topic, based on your option, is finance, Colin.
hey, come on, guys. All right, if I said to you, finance, what would you say?
I'd fall asleep.
Oh, how rude.
Finance. Would companies be able to grow without finance and cash flow?
There you go. See, Mark's taking his time to think about that, whereas you didn't, Joe.
It's on Google.
Ah, that's right.
Finance definitely has a place.
Yep.
Not all companies need finance.
Oh, come on. I'd say, how many companies have 100, 200 grand in the bank sitting there ready to buy a new machine tool, as an example?
Colin Griffiths Enterprises.
No. Mine's all gone on a new car, because you might have heard someone nick mine.
Oh,
Anyway, move on.
Yeah, you're right. In truth, the majority of companies need, and even if they don't need it, they probably should buy it on finance. In my opinion, money's cheap.
Yep.
Yeah. Obviously, spend wisely and all the rest of it. And
Well, it's cash flow as well, because if you're buying a new machine tool, yeah, say you do have 100 grand in the bank, you buy a new machine tool, that cash is all gone, but then you're going to pay the wages next week.
Yeah, it is about cash flow. But then again, you've got companies like DMG Mori, which have their own bank. Or their own book, as they class it. In other words, they're lending their own money to their own customers and prospective customers.
So you could tell. Sorry, go on.
I'll say it opens a bit of a minefield. Finance is kind of like saying, "Do you like cooking?" Isn't it? You know.
Well, you like eating, Joe.
Well, yeah, but do you know what I mean?
Necessary.
What's the time? I need to go.
Oh, harsh.
No, in a way, but no. Talking about finance, you know, you talk about machine tool. Is it 2 year, 5 year, 10 years? Is it lease? Is it like a PCP almost on a car?
HP,
Does it matter? I'm not going to own that machine in 3 years, but I get renewed with a brand new machine which has got the latest technology, or do I want to own it at the end of that term? It opens a
I think one thing you said there about minefield. Well, catfield if you want to if you want to blow your cats up.
I suppose you're asking the question, but you're probably the most knowledgeable, bearing in mind your past career was with NatWest. What was you doing at NatWest?
I was just a telemate.
He was the guy. He was the guy that sold the pigs. Can you remember the pigs back in the day?
Yeah,
all right, lads. Right. Yeah.
Saving banks.
Do you know, I've still got them. They're worth about 400 quid, aren't they?
Oh,
Maybe.
All right, let's nick that. Anyway, moving on. Finance. Yeah. So, would you, as an engineering company, know your bank manager?
No.
Well, actually, I went in to see mine, and I was told there isn't one at the bank anymore.
Exactly. I rest my case.
Are they in the cloud?
Yeah, exactly.
They're changing all the time. They don't want to look after you. They don't know your business and things like that. If you use a broker, they're in it for, I would say, the long term. Absolutely. So you want to pick up the phone and say, right, I'm buying a new machine tomorrow. Can you get it sorted? You phone your bank and they go, yeah, it's going to take me 2 weeks. I need all this information. Your broker, he will know, boom, 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 straight away. Well, pretty much straight away.
Is a broker more cost effective than using a bank or a building society these days?
I don't know if building societies lend money for machine tools. But that's me being not controversial.
Well, you're the man in the know.
I would say yes, because they can go to a number of different funders. So you go to your bank, that's just going to use one. There'll be one funder. A broker can go to, I know, example, Paul Cox, who's a regular, Asset Finance Northampton, he can go to 65 different funders. So he'll get...
He's a busy boy.
He
I was going to say, yeah.
They've got the systems in place, mate. It's all about software.
Yeah.
But he can get you different rates, different levels of deposit, different, all sorts of, you might just think, it's going to be one transaction, one deal. But he can come up with alternatives for you.
Well, I'm not a finance king. In fact, I know nothing about finance.
Can you lend me a tenner then?
But to me, there's one big thing that often doesn't get talked about, and that's if your money and debt is in the same place, you're very liable. No, not very liable. You're very...
Vulnerable.
Yeah. Thank you. You're very vulnerable. If you get a phone call from this bank manager you've never met saying, I need to recall your overdraft, I'm not keen on your business, for whatever reason, it does happen.
Yep.
You cease to trade. Whereas if your money or your overdraft is in one and your debt is in another company, You can look at refinancing to raise cash to pay off the bank overdraft, and you become less vulnerable, don't you? Yep. Whereas if your cash and debt is in the same place, you're one phone call away from not having a business, probably.
But also, if you've got all your debt in one place with one bank, they might say, well, we're not prepared to take that level of risk with your business. Whereas if you you don't want to overcommit, obviously, but if you go to 3 or 4 different funders, then you're likely to get more money.
I know I'm talking about DMG Mori, and the reason I am is because one, they're the only machine tool company that I know have their own book.
And two, it's your client.
It is my client, but
and Steve Finn standing behind you.
But from the point of view of actually talking about a case study, there's a company down in the southwest called MCNC. Okay,
Lee Howarth and Mark, isn't it, from memory?
That's right. Yeah, they've got some fantastic machines down there, and very, very different machines. And there's no way that they could actually sort of take that investment on without the actual financial help. I think they have around about £2 million worth of equipment from DMG Mori, and would have someone like an independent take that risk?
That's a biggie, isn't it? That's a biggie, but.
I don't know. The honest answer is I don't know. But again, that comes down to your finance provider, albeit I would suggest a broker who will know your business and be able to go to all the different funders. Yeah. And all different funders, DMG Mori included, have different appetites of risk. So they might say, yeah, we're comfortable with A, the strength of business, B, the quality of the machine, because they might lend more against a DMG Mori. Like other machines are available.
But they've also said that the process of actually not giving spreadsheet after spreadsheet of forecast to forecast, which you can't control in this day and age in manufacturing, can you? It's very difficult. Yeah. That's the process, and that's why they wanted the machines and they had the right finance package.
I guess Colin, I guess the advantage using DMG Mori to buy a DMG Mori, I don't know how that model works, but I'm presuming they can build in their margin, can't they? So say that you've got £50,000 margin on a machine. So, when you put that machine in, it loses a bit of value, but you've got less.
Risk offset?
Risk offset. So if that machine comes back 12 months later, they can sell that as a second-hand machine,
Absolutely.
Can't they? But in the used market, it won't be worth as much.
They've got control of that market as well, though. So if they take that machine back, they can then resell it. Whereas if it goes out to, I don't know, an auction house.
Well, I mean, my philosophy, if I was putting an engineering company a brand new engineering company to the marketplace, cash is king. So if you can borrow money. And actually, I mean, you look at the increase of cars, the way they've actually bought, which is normally leased. There's more increasingly leased sort of company cars or personal cars now than there ever has been. Why own a machine tool?
That's the big one for me. That is the number one. If I was an engineer and I pretty much know what I would buy and what software I would buy, do you know the one thing I don't know if I would lease and give it back in 3 years and get a brand new one? Or would I, which brings the payments down, makes it more cost effective considerably, or do I want to pay a lot more and own it at the end? Because I've got a car outside which I'll be a fool to buy. I'll be an absolute mug to buy.
Well, it's awful. No one likes it, Joe.
No, I'll be better off putting it into Facebook, into property, whatever. But I can afford to pay.
Still, lend me a tenner then.
I can afford to, but I can pay for it monthly.
Different type of asset, you see. So a machine tool is going to be
same
good.
Argument, Colin. Same argument.
We're not going to have a dust up like last time, Joe. Machine tool, good for 10, 15, 20 years. Your car, I've seen you drive. You're probably lucky to get it going 3 years. Then you want to change it and just keep changing it. Machine tool, you want that in the machine shop. All right, you have it paid off after 5 years, but then you go and invest in another one. Keep that, like the blast from the past. You see some of these machines going for 30, 40 years. You still want them in background.
Well, I saw a quotation for a mid-range. I won't mention it.
Been on Google again.
No. A mid-range. A friend of mine's looking at buying one, a mid-range turning centre. I won't mention the brand. Mid-range turning centre with milling, not Y-axis, milling. So the option where he owned it was 1,800.
Yep.
The option where he didn't own it was how much?
Same 1799.
No, it was half, £900.
But
so he asked me my advice, and I said I would go for the half, but I'd buy two. That was my advice, because you can make the money you can make on that second spindle far outweighs the money you're going to make owning that
machine.
Only
if you got all the work for it, though, Joe.
Yep.
Well,
we're looking at positives today, Mark, not negatives.
We'd all have to go in, wouldn't we, if we didn't?
But you say that after say 3 or 5 years, that's leased. There'll still be finance outstanding, and then they'll have to take an option and refinance. I don't know the deal.
No, that's it. No, you just get a new one, won't you? New one, quicker rapids, become more efficient. There's arguments to and from. Me, I would rather.
I disagree with you, Going. We're going to have a bit of a.
If you think about big companies like BCW Manufacturing up in the north, I mean, they have grown absolutely hugely over the last few years. And
I think 50 million turnover, and they aiming
I
for
think
70 or something like that.
Yeah, they're aiming for 70. So therefore, where do you get that finance from?
A very happy bank manager.
Yeah, exactly. But they've got a fantastic business model, and they've actually, they've worked against it, and the risk offset has been minimal for them to actually borrow the money, I'm sure.
Yeah. What about then? Again, we mentioned Paul Cox from Asset Finance Northampton. He came up with a great one, which...
Is he employing you yet?
No, he's not. He's just paying me, though.
Okay.
That's the same thing, though, isn't it? You go to your bank or you go to your funder, you say, right, I want some finance for this machine, be it HP or lease. I'm not going to fall out with you again, Reynolds, by the way. But...
They're not looking at each other, by the way.
It's because he knows I'm right.
Oh, yeah, right.
Carry on.
Moving on. Credit lines. So if you've got a decent funder and the business is strong enough, you could say, right, I'm buying this machine tool for 100 grand. The person who sorts out your finance goes, well, actually, we'll get that facility in place for you, but we'll put another 400 grand in the background. So next time you go to an exhibition, you could say, I want that machine. I want to negotiate on it. Well, you've got to get your finance.
I know.
Got it.
Is that typical is Joe Blogs an SME? Is that, I know it's big in America, funding lines. Over here,
I don't think it's as popular or thought about as it should be. I think as a bank, in my days as a bank manager, I do apologise everybody for that. It would be
Was
part
you
of
a manager?
So it's basically it's basically guaranteed funding without going for the rigmarole of
you've already done it.
more.
Yeah, the guy who's looking after your finance for you is good enough to know your business, got the background information. It's only a little bit of information generally. He'll put it in place if he's got half a brain, so you can go to that open house, to that exhibition. So actually, I like that machine. I know there's a special offer at the exhibition. There always is, but I've got a little bit more room to manoeuvre because I'll buy it right now.
I've got a couple here, Colin, and keep them as brief as you can. But I'm just trying to demystify a couple of things. Again, we see a lot of engineers.
Don't put me under pressure, Joe.
And we all talk about a lot of things without necessarily knowing what they mean.
Yes, Joe.
Okay. So annual investment allowance just been raised recently to £1 million.
Correct.
What does that actually mean? Let's say I'm an SME and I make a small profit, or what doesn't matter, I make a profit. If I invest £1 million, how does that appear on my bottom line?
You put me on a spot there because I don't actually know the complexities of that. Anybody with a decent accountant will be able to explain it, but a lot of accountants out there probably wouldn't even know the answer to that either. But you get tax benefits by investing, and you can invest up to £1 million, so that'll offset against your tax bill.
I presume it's the amount you pay tax. So 20% of that £1 million is offset. Is that? But that is.
Yeah.
I don't know.
I don't know the actual intricacies of it, but basically it's tax effective for you to invest in your.
Yeah, I know the MTA have done a lot of work on that. It was I think it was 250,000 up till fairly recently. And the MTA have been pushing Westminster.
Yeah.
They've actually done something right for a change. Westminster, and they've upped that. As per the MTA's request, to £1 million.
But if you look at the way that accounting is done, from a sole trader, let's say, or limited company, they're basically very much on a balance to be PAYE, isn't it, or basically self-employed. And I wonder if that's the difference between companies, effectively, that are actually borrowing money or leasing.
Yeah, another one. I don't want to punch you, but another one is...
Well, you know who's going to win,
if I'm leasing my car, if I'm leasing my machine, how much VAT do I pay?
All of it.
No, zero. You pay zero. So it just goes on your monthly. If I'm buying a machine, I pay my VAT up front. I don't pay any money to a machine lands, whereas I know you can defer payments on things. But anyway.
That comes down to having a decent accountant explaining. So it might be a lower cost initially in terms of your finance, but you might get less in your depreciation.
Yeah. One final one for me.
Okay.
And this is the other one. This is the other one I hear a lot. I've got my company. I'm making lots of parts. I've got all my machines. I can afford them. At the end of the month, no one's paying me. My average is 60 days, 90 days, 100 days, 120 days. So I've actually got a great company, but I can't prosper. I can't generate cash. So invoice discount, yes or no?
Absolutely. Every week. Because these days, banks want security. They won't give you an overdraft because they've got no control over it. So you could have an overdraft of 100 grand and say, right, we'll give you that 100 grand today. You can go out and buy a new Ferrari tomorrow. Don't know what one for 100 grand. Invoice discounting.
Second hand.
Yeah. Oh, okay, that's fair enough. Yeah, I might look at that then. But invoice discounting will only be against your invoices, but as they have more control over that, the bank do, and you do as well, so you know exactly what's going on if you've got a decent accountant, they are more likely to give you increased facilities as your business grows.
Right, guys. Yeah. Guys, we need to wrap this up. Okay.
Oh, okay, Mark.
Give me one positive about borrowing money, Colin.
You can invest new machinery, which possibly, if you don't have the cash in the bank, so you can make yourself more efficient and prosper even more.
Joe?
As Colin said, same as that. I'm a fan of invoice discounting. You can build the margin in quite often, but the short answer is I can keep my money in my pocket and I can use the bank's money. Obviously, if things go wrong, interest rates go through the roof.
HP leasing will be fixed generally.
Yeah, exactly. Yeah, but as we sit here today, I would rather have 100 grand in a bank and borrow 90 of the banks, pay a small deposit. Obviously, now I'm going to pay more, but I've got security of a nest egg if I need it.
Absolutely, and the interest is tax deductible.
And just my view of this.
Sorry, back to Mark.
Sorry, just about. Yeah, I am here.
Yeah.
If you, as an engineer, are looking to borrow money, I would always look at both options, 50-50. You know, do you lease or do you borrow against any capital equipment? That's my personal advice.
Yeah.
Would you agree with that?
But I'd always go back to, you've got options. Bankers will give you options, but go to your accountant. They're the ones who will give you the right. It's
a spreadsheet, isn't it? That number at the bottom.
Well, talking about spreadsheets, it's the end of our episode 16 of our podcast, the MTD podcast about finance. Goodbye.
Bonjour.
What's that got to do with spreadsheets?
Yeah, absolutely nothing whatsoever, Mark.
Well, numbers.
Okay, we need you to hit that button there, which is a massive fail button, I'm afraid, Mark.
Is it this one?
Yes, absolutely. Yeah. Oh, no, the cricket even. So anyway, moving on. Thank you very much, Mark.
Thank
Joe,
you, Colin.
And Tom, and Colin.
I need a banana. I'm going to split.